us right now is the Gartman Letter editor and publisher, Dennis Gartman. And Dennis, it is good to see you this morning. Thanks for being here.
Oh, thanks for having me.
So
you guys scraped the bottom of the barrel, and there I am.
It's so what? Not true, Dennis. But tell me this: how are you investing, and what do you see about this China story that is actually dictating how you allocate capital and look at these markets?
Well, first of all, I have only my own money at risk. It's my few millions, so it's very it's sacrosanct. And what I talk about in my newsletter, I do. And for the first time in quite some long while, I'm actually getting modestly, and I mean the operative word here is modestly, net short. I'm a little concerned about how quickly things sold off last night on the mere rumor, and a rumor of a rumor, that the Sherpas had not been able to reach any sort of agreement, and that there would be a delay or even an early leaving by the senior Chinese delegation. So the fact that you were able to give up almost 400 Dow points in the course of a half an hour tells me that underneath here there's nothing but thin air. So you have to be very careful. I think that I keep in my own index called the International Index of the 10 largest stock markets in the world, and it made its high last January 29th, actually, of 2018. We have not come anywhere close to making new highs, and so we've actually been in an international bear market for almost a year and a half. Let's be careful.
Okay, so given that that downer for the markets that trade fights have been, and now the president facing possible impeachment, do you think he now gets a deal? Is it a necessity for him, and how do the markets react?
Well, I think James, I think it's a necessity for both presidents, for Xi and for Trump, to get some sort of a deal. It's going to be, what's the term now, a skinny deal. It won't be a broad and expansive deal. We won't probably be able to get intellectual property rights taken care of. We'll probably not be able to get infrastructure. We'll probably not be able to get a broader representation. We'll get some soybeans sold. We might even get some corn sold. But will there be anything broad and expansive? Sadly, probably not. Will the Chinese give us promises that they won't keep? Probably so. And sadly, that's just the history of these sorts of agreements. It will be less than anybody hoped for. It will probably have to wait until after the next election to get an expansive trade agreement signed between both countries.
Dennis, what percentage of your portfolio now is in cash, and have you increased that? And also, what's your read on precious metals?
Well, first of all, I'm quite bullish of the precious metals market. I've been bullish of gold for quite some period of time. I'd really like to see gold get above 1520. That'll be a breakout to the upside, and I'll add to my gold position. Gold is probably 30 or 40% of what I own, which is probably a little too much for the average American to have. But I'm quick to take losses. I'm quick to get out if something turns against me. As far as cash is concerned, the rest of my stuff is in bonds, corporate debt, and I hedge it with derivatives. So actually, if you want to say cash, I'm probably 100% cash, because I'm equally net long and net short. My net exposure to the stock market is relatively minimal at best.
So we're heading into the third quarter earnings reporting season. Are there anything in the charts that you see that indicate performance ahead? I know you look at technicals, Maria, in terms of charts.
Yeah, I look at technicals rather substantively, and it bothers me that if you look at the Dow, if you look at the S&P, if you look at the Russell 5000, almost whatever index you look at, you're getting what the technicians call a head and shoulders top, which is formed over the course of the past several months. But more importantly, as I said earlier, the fact that my international index has refused to make a new high since January of 2018 tells me that the internals are starting to turn down. And I watch the CNN, I hate to put in a plug for another network, but the CNN Fear and Greed Index is a really good index for the average American to take a look at. And it has been making consistently lower highs and lower lows, and it's turning quite bearish. So I just think that one should be careful. Pros can be quietly, modestly, just a tad net short. The average investor should be, it's still a bull market for him. He should be less long than he's been, however. But for the pros, being short is not such a bad idea right here. And I'm short marginally, and the operative word here is marginally. Remember, this is my own money at risk.
Dennis, it's Dagan McDowell. Have you done any work on market reactions to impeachment proceedings?
Well, having lived through two impeachment proceedings, well,
my friend.
It's not pretty. What happened during the Nixon impeachment, which never really got to impeachment itself, was terrible. The Dow fell from 1,006 to 474 over the course of 18 months of the entire impeachment proceedings. during the Clinton impeachment, the market actually didn't do very badly at all. But I continue to remember how long it dragged out in the Nixon affair, and this seems more like the Nixon affair than it does the Clinton affair. So, quite honestly, there's nothing good that comes out of it. The best that you can say is that things won't get bad. The worst that you can say is things can get terrible.
Any thoughts on the Fed cutting rates in a week and a half or 2 weeks? And what about the earnings period? What are you expecting?
If I were a voter on the Fed, I would probably vote not to cut rates. I think, however, that there's probably going to be a slight majority for cutting rates. Certainly, we'll probably get a 25 basis point cut before the end of the year. The question shall be, will we get 25 in next week and 25 in December?
We got the minutes yesterday. We got the minutes from the September meeting yesterday when the central bank approved the quarter-point reduction. And those minutes show that investors are expecting the rate cut. But there's real division within the Fed.
And I don't mind that. I don't mind having the Fed arguing one with the other. That doesn't bother me even much at all. But the fact was there was a great deal of dissension. The Beige Book was relatively inconsequential. The minutes were terribly inconsequential. And I don't find it detrimental to find divisions within the FOMC. In fact, I rather like it. It shows we have individuals looking at their own data and making a decision. And I think that the Fed chairman will do a fine job of finding some sort of consensus. Do I think that they'll end up cutting rates? Yes, I do. 25 basis points. But as I said, if I were on the FOMC, I'd be a dissenter and vote no.
All right, Dennis, great to talk with you. Thanks so much.